Hey guys, I recently made some changes in my ETF portfolio, and I want to show you guys or share with you some of the changes that I made. And I'm going to take you behind the scenes and just bring you with me, bring you along so you can see exactly the huge changes that I made to my ETF investing portfolio. Remember, we're keeping investing simple over here. If you guys got any questions, please drop me a comment below. Anything you want to ask, please feel free to ask in the comment section below. But I want to talk to you about the changes I made and why I made them. Now, we're growing a single stock portfolio over on Charles Schwab, but here on Vanguard, we're actually having our entire ETF portfolio there on Vanguard. Now, let me show you kind of what I had, and then we'll talk about each one of these things. Let me just share my screen here and bring you guys into my actual ETF portfolio and what I have, and I'll explain kind of what I'm doing here on this screen right here. Here, guys, we're looking at, again, Vanguard is where we got our investing for ETFs. This is about the amount that we put in there. It's a little bit less, a little bit more every single month that we're putting towards our ETFs over on Vanguard. Now, part of our strategy, let me explain to you some of the strategies. Then I'm going to actually look at some of these and pull these up in Vanguard to kind of go over each one of them that I do have. At Vanguard in our ETF portfolio, index fund / ETF portfolio, we're looking at low cost index funds and low cost ETFs. Okay. In terms of the criteria and the strategy that I look at, guys, in terms of buying ETFs or even index funds, but typically it's ETFs, I look for, I'm just going to run through some of these guys real quick so you can see the criteria and strategy that I take a look at before I purchase one, right? So I look at a low expense ratio, obviously low cost. That means it costs us as little as possible to own it. I also look at the category. Is it a large cap ETF? Is it a mid cap ETF? Is it a small cap ETF? Now, I don't really buy a lot of small cap ETFs because I prefer to be in the mid to large cap range when it comes to ETFs. I also look at it. Is it a value ETF or is it a growth ETF? A value ETF is an ETF that is full of companies in the bucket that are pretty stable companies. They offer pretty decent dividend, and they've been around for a long time. That's the companies that are in the bucket of a value ETF. So AT&T, Coca-Cola, right? These companies, Procter and Gamble, these companies that have been around for a long time, very stable, very steady companies are value ETFs. Growth ETFs are a bucket of stocks that's filled with companies that are growth type companies, technology and companies that are expected to get above average growth. That's what I look at when we're looking at growth ETFs. Okay. We also look at when we're evaluating ETFs, what are the holdings? What is in the ETF? What are the companies that are in the ETF, right? And we look at how they're weighted. For example, the S&P 500 is probably 30-40% weighted technology, right? Very heavy. So I look at that when I'm looking at these ETFs as well. I also look at what sectors they're in, right? Is it utilities? Is it energy? Is it consumables, like food and so forth? Is it going to be financials like the banking services and, banks and, those type of companies? Is it going to be the healthcare sector? Is it going to be the technology sector? So I'm looking at sectors as well. Of course, I take a glance at past performance when I'm looking at and evaluate what ETFs to buy. 1 year, 3 year, 5 year. I look at, are they rated high in terms of risk? Or are they rated low in terms of risk or sort of in the middle? I also look at the number of stocks that are actually in the bucket. Are we talking about an ETF that has 80 companies in the bucket? Or are we talking about an ETF that has 700 companies in the bucket called the ETF? I also look at the market price, and I also try to get a market price, meaning what is it currently trading at, right? Because I'm a long-term investor in ETFs, the market price is not a big swayer of me one way or the other. I don't really care if it's trading for 200 or 250. I'm going to hold it for quite a while. I also look at, I try to balance my ETF portfolio out, sort of a 90-10 split, 90% stocks and about 10% bonds. Remember, this is long-term, guys. This is something I'm going to be holding for 15, 20 years. And so I don't need to have 100% in the stock market. I like to have a little bonds in there. Some people, as you get older, they like a 60-40 split, 70-30 split. I like a 90-10 split. I still want to be pretty heavy in the market and not, have so much in bonds. I want that growth and so forth. Because remember, this Vanguard portfolio of mine, this ETF portfolio, is just one of my portfolios. I also have a single stock, individual stock portfolio that we're starting to grow on our Patreon at Charles Schwab. But I also have a TSP, a thrift savings plan with the federal government that's been growing for years and years and years. That's my primary over there. And if you know anything about a TSP, thrift savings plan with the federal government here in America, you know that that's basically low cost index funds, right? Is what you're investing in when you have money in that TSP. And the TSP is just like a 401k or a 403b. It's not different. It's just they call it a thrift savings plan when you have it with the federal government. So this is kind of our strategy right here, right? The things we're looking for in terms of ETFs. Now, let's look at what I actually have right now and what I did. I'm going to explain it here on this sheet. And this is my own spreadsheet, guys. I just kind of put this together to keep up with what I have and the moves I make in this particular ETF portfolio. The very first thing I have is an index fund. I do have VFIAX as an index fund. And I've got that index fund because I wanted at least one broad-based large cap index fund that handles the big stuff. It's a broad base. It's kind of the anchor of my ETF portfolio. Now, again, I know we're talking about the ETF portfolio, but in my ETF / index fund portfolio, I've got VFIAX. It's an index fund, and I'll go ahead and pull it up in Vanguard so I can just kind of go through it and show you what I look for real quick. It's Admiral shares, which means there's a minimum to get into it. I had to drop $3,000 on it to get into it. Has a really, really super low expense ratio at only 0.04%. And again, let's look at some of the things I look at. Price. I look at the what it's currently trading at and some of the past performance. Let's look at past performance first. Year to date, it's got a 16.67% return. By the way, this is the S&P 500. It's just following the top 500 large cap companies in America is basically what it's doing. For the 1 year, that's year over year, 22%. Year to date is going to be January till today, and year over year is 365 days. But the 3 year is 9.55. And what you guys will see is the 3 year on past performance for all of these funds is going to look a little bit lower because we had that real down year back in 2022 when the entire S&P 500 was down like 18-19%. Negative 18-19% for the year. But the 5 year is almost 15%, 10 years at 13%. That's tremendous, right? That's the S&P 500. And that's one of the main reasons I like to keep this a broad-based index fund hanging around. Now, these are my actual ETFs starting right here. These are my ETFs right here. And you notice I've crossed a few out. One of the things that I had here, guys, was I had a lot of ETFs. And I didn't want to have so many ETFs. I wanted to sort of narrow down my ETF portfolio. I started out with 1, 2, 3, 4, 5, 6, 7, 8, 9 ETFs. I don't need 9 ETFs, right? I had some overlap going on, and I wanted to really narrow that down. Remember, ETFs is a bucket of stocks. And so I didn't need to have all these different buckets because I had a lot of the same companies in all these buckets, right? In a lot of them. So I had some large cap growth VUG. I sold it, got rid of it. Yep. Large cap value. I had some VTV. I got rid of it. I had some mid cap growth. I got rid of it, VOT. And I had some tech. I got rid of it. Remember, I already have tech up here in this S&P 500. Quite a bit of tech, right? So I did need to have all this tech and also have this ETF that was sector specific in the tech area. So I didn't need VGT and VFIAX. And by the way, VFIAX, its ETF sister is VOO, right? The ticker symbol VOO. If you have VOO, you have VFIAX. The only difference is VOO is Vanguard's version of the S&P 500 ETF that is an ETF. Whereas VFIAX, like I have, is the same thing. It's just the index fund. So I got rid of these large caps that I didn't need. And I held on to sort of a large cap, kind of a blend hybrid called VYM. Why did I hold on to VYM? Because VYM is considered the dividend ETF of Vanguard. It's full of companies in the bucket of stocks that pays good dividends. So let me show you VYM that I held on to. So here's our VYM, guys. Let me actually pull it up in Vanguard for you. So over here in Vanguard, we got VYM. And one of the reasons I wanted to hold on to VYM, and I'll show you in a bit, still has a very low expense ratio at 0.06%. Very, very low, right? Looking at some of its performance, though, the performance of VYM, remember, this is a dividend ETF, gives great dividends. Our 1 year, again, 1 year, year over year is 16.31% return. Our year to date for this year is close to 13%. Look at our 3 year. Again, once again, 3 years are going to be a little bit lower because of that bad year. And our 5 year and our 10 year is still over 10%. So an excellent, excellent, excellent ETF that is currently at about $120 per share. And what is it made up of? It's large value. But again, it has 553 stocks in it right now. And you can look at some of the other statistics on it, the PE ratio and price to book ratio. But if you come down here and look at what's in it, it's filled with consumer staples, energy. Consumer staples and energy makes up about 21% together. If you look at technology is only about 11% of it. And also financial sector has a nice chunk in there as well. I also have a financial ETF that I'll show you here in just a bit. If you look at what's in there, you're talking about the Broadcoms, the JP Morgan Chase, the Procter & Gamble, the Johnson & Johnson, the Home Depot, some of the more stable long-term companies that are going to offer good dividends, solid returns, but at the same time, these are solid value companies that are going to be around and have been around for a long time. Bank of America, Walmart, etc. So these things aren't going anywhere. It's not filled with it does have a lot of value companies in this bucket. Stable companies that offer good, solid returns that may not be looking for some of that super duper growth, but they still give you a lot of value for your money. And that's one of the reasons I wanted to hold on to VYM. And every dividend is going right back into the ETF, right back into the investment itself. Now, when we come back over to my spreadsheet, I kept VYM. I decided to go ahead and keep VOE. Now, why did I go ahead and keep or pick up VOE? You see, I just bought it here. Why did I pick up VOE? I like VOE, and let me share my screen with you guys again and show you a little bit of VOE. Now, VOE is sort of a mid-cap value ETF. As you notice here, it's 0.07 expense ratio, pretty low, mid-cap value, right, is it tells us. It has a kind of a higher risk, right, at 5, so the risk is slightly higher. But as we look down at it, look at what it's currently trading at, 155.29. We can also look at some of its performance, and it's a mid-cap. So sometimes you see mid-caps are not going to, at least in the last 10, 15 years, be performing as well as some of the large cap. But we see the mid cap at year to date, 11.22% return, 1 year over 13%, 3 year again, a little lower, 5 year at 9.76, and 10 year at 9%. So the reason I picked up VOE is to sort of get a little bit of diversity in the portfolio. So I wasn't real top heavy with only large cap stuff. I'm not a big fan of small cap ETFs, but I wanted a little bit of diversity in there in the mid cap range, as opposed to having everything being large and technology, et cetera, right? And so we also see that VOE has about 191 stocks in the bucket. And then we come down here and we see, well, what is these mid cap? What is the sectors that these mid caps are in? Basic materials, consumer discretionary goods, financials again, industrials is pretty high in the mid cap range, as well as utilities are almost 12% of the bucket itself. And some of the companies you see, Carrier Global, Digital Realty, PG&E, right? United Rentals, of course, and Ameriprise. So you don't see some of your huge big companies here, but you see a nice, good balancing act of mid-cap stocks that are in this ETF. Now, looking back at our spreadsheet, guys, I also told you I had some sectors. So again, everything crossed out, we don't have anymore. We sold, got rid of it. Everything that's highlighted in blue, we still have. We have VYM, we have VFIX, we have VOE, and I picked up a short-term bond ETF to make up for this 10% that I want to make sure I have in my portfolio. And I'm also watching VGSH as opposed to just having BSV. But I looked at it was really a toss up between BSV and BLV. And I said, let's go ahead and get some balance with BSV. And it's just a bond ETF that's in the bucket of stocks, bunch of bonds in that bucket. So with ETFs, you can have stocks in the bucket, you have bonds in the bucket, you can have a lot of things in that bucket. So I picked up BSV and I went ahead and made sure my portfolio over here in terms of ETFs has a little bit of 90-10 balance to it, right? 90% stocks and equities and then 10% in bonds, okay? Let me look at BSV real quick with you guys. BSV is Vanguard short-term bond ETF. Still has a super low expense ratio. And let's look at the price on it right now. We know it's trading at about 77 bucks, 77.81. The portfolio composition, what's in it? It's treasury bonds in it, short-term bonds, meaning these are 1 to 3 year bonds typically. And if you go down here to see what type of bonds it is, 69, almost 70% of it is U.S. government bonds. Then you have some AAA rated bonds, some AA rated, and you have some single A rated bonds. And of course, you have some triple B rated bonds as well. So that's the credit rating of the bond, right? So I'm also looking at not just BSV, but I'm also looking at the other one out there, guys. The other one is VGSH because I may replace it with VGSH. Let me show you that one real quick. If we look at VGSH, one of the reasons I may replace BSV with this one, still in a super low expense ratio. The thing about VGSH, and the reason I may go ahead and change it out, is because VGSH is 100% U.S. government bonds. I didn't show you the returns or the performance of BSV, but it's a little bit higher than the performance of these bonds, right? The 1 year bond is 5.35% because bond yields have been up here in the last year. So year to date, 2.36, 3 years, less than a percentage, 5 years, slightly over 1%, and 10 year, slightly over 1%. And you're saying to yourself, well, these aren't great returns. Listen, the whole point of bonds is to sort of hedge yourself against downturns with the other parts of your portfolio. So if the other parts of your portfolio happen to come in negative somehow, you got a little balance with the bond market by having bond ETFs as well. And I don't want a large percentage of my portfolio to be over here in bonds, just a small percentage only. About 10% of the portfolio breaking into these bonds. So I'm looking at VGSH and maybe replacing BSV with VGSH, but I don't need 2 or 3 different ETFs or bond ETFs. I only need one, and I'm going to choose between those two here shortly. And so as we see, guys, here back on my spreadsheet, I also picked up a couple of sector-specific ETFs, VFH, which is specifically kind of focused on financials, meaning financial services and banks and things like that, right? Your Citigroup, your JP Morgan, your Bank of America, all those things are going to be in the ETF called VFH. And then, of course, real estate, I went ahead and picked up VNQ, which primarily is based around REITs and commercial and industrial buildings, etc. So I wanted to pick up an ETF where I claimed a little bit of REITs because I really understand the real estate market that's out there, and I always keep up with it. And I've been owning and managing real estate for the last 24 years. So I understand real estate. I understand financials. 2 sector-specific ETFs that are in sort of my wheelhouse, things that I understand. So what I try to do also, guys, is sort of keep a date and a running activity where we are. So what we have right now is highlighted in blue. It's the VFIAX index fund, which is just the S&P 500. We still have VYM. We still have VOE. We picked up VOE, and also we picked up BSV. Still watching VGSH. Going to do a little more research on that other one. I may go with that one because, again, it's all government bonds. And then I also have picked up VFH for a sector-specific in financials ETF, and I also picked up VNQ, sector-specific in real estate. So that's what I did. That's what I have, guys. Those are the major changes that I made in my ETF portfolio, the huge changes. I didn't want to have too many ETFs. I needed to trim that thing down. And over the last few days or over the last week or so, I went ahead and trimmed it down. And now I'm sitting on only one large broad-based index fund and 5 ETFs, one of which is a bond ETF, because I want to have that split of 90% into equities and 10% into more fixed assets like bonds. I've got a mix between large and mid. I've got a few sector specific, and I have some criteria that I look at, and I try not to keep too many ETFs hanging around, right? Instead of spreading myself thin and reducing risk to like astronomically low levels, I decided to go ahead and unload some of the ETFs that were kind of duplicates of what I had, right? I hope you guys got something of value on this quick video. If you did, drop that comment, smash that like button, and please feel free to reach out to me if you got one. The best person to take care of the old you is the young you. Guys, take good care of yourself and take care of other people. Until the next video, peace.